Good day, YouTube. This is Jay Money with Wallingford Financial. I just come across this article. There's always stocks that we want to avoid and some that we want to get into, but always ones want to avoid. But this is 3 stocks to avoid this week, and this just came out yesterday. So it has been a weird up and down couple of weeks, but the 3 stocks I thought were going to lose market for the week are Boeing, ticker BZUN, Lazy Boy LZB, and Bed Bath & Beyond. I just did a video on Bed Bath & Beyond. Rose 1%, fell 8%, sank 3% respectively, averaging about 3.3% decline. S&P 500 experienced a 4% move lower. It was closer, but I was wrong. I've still been right in 29 out of the past 45 weeks. Now let's look at the week ahead. I see Tesla, Kirkland, and Vera Bradley as stocks you may want to consider steering clear of this week. And let's go over the near-term concerns in the 3 investments. So first is Tesla. There was a time in the market applauded stock splits, but Tesla shares slipped 3% last week. Despite completing a 3-for-1 stock split, its aspirational electric vehicles continue to sell briskly, something that most automakers can't say is the case for them these days. Tesla's fantastic cars, the stock may be a bumpier ride. I've covered Tesla a couple times. It's a long-term hold for me. But has Tesla earned the right to be the country's 5th most valuable company by market cap? That's always the question. Will the otherwise brilliant Elon Musk say something or stumble into a controversy finally strips the Teflon coating? Next is Kirkland's. Seen the home good retailers fall hard in the earnings, and on Tuesday it could be Kirkland's investors that learn that the home is where the heart is. That's what she said. The chain that sells home decor, furniture, and other house staples post results for the fiscal second quarter on Tuesday morning. It's not likely only to be pretty. Analysts see a $97.2 million in revenue, 15% below where it was a year earlier. This isn't new. There will be a 3rd time in the past 4 fiscal years that Kirkland's posts negative revenue growth. No relief for the bottom line. Wall Street's holdings out for a huge quarterly deficit. A sharp contrast from the small profit is squeezed out last year's summertime report. Kirkland didn't experience the resurgence that some home goods chains delivered earlier in the pandemic. Trailing revenue is 17% lower than it was when the business peaked in fiscal 2019. Next is Vera Bradley. Kirkland isn't the only struggling retailer trading for $4 and change that's reporting quarterly results this week. Vera Bradley checks in on Wednesday morning and has fallen short of Wall Street profit targets in at least 4 quarters. Vera Bradley is the designer of high-end handbags, luggage, and other travel items. It also owns a major stake in bracelet specialist Pura Vida. Vera Bradley shouldn't have seen in business pick up once the world started traveling again, but the market expects a decline in sales of the 4th in the quarter. It's going to be a bumpy road for some of these investments, but if you're looking for safe stocks, likely to find them in Tesla, Kirkland, and Vera Bradley. So, I don't know, I would have to agree with the last 2. I don't really agree with Tesla. I'm at a 70 to 80% return on that, but if you have Vera Bradley, Kirkland's, or Tesla, you can list that in the comments. And if you have any of these that we first went over, BZUN, Lazy Boy, or Bed Bath & Beyond, you can list that in the comments as well. So I agree partially with the article, but just wanted to throw that out there and see who has these. But Again, I don't give tax, legal, or trading advice, just stating my opinion. And if you haven't smashed that like button yet, go ahead and hit that for me, as well as subscribing and hit the bell so you're notified of when the next videos drop. Again, this is J Money, Falling Forward Financial. Happy trading, happy investing, stay green. Cheers.